Ciao fellow traders, thank you for joining me. Today we're going to go through some basics of market structure and price action. I will show you how to read just candlesticks and gauge where price is going to go and what the structure means for the following movements in price. We're going to speed run a course on concepts used in price action and market structure, the kind that I do daily. And then I'll show you a shortcut, which is basically the launch of my completely rewritten market structure indicator. Don't need to use it because you can use your eyes to trade market structure. And that's what we're going to do today. But first, the intro. 1 second. Where's the intro button? There you go. Okay, so I sketched something here, and now we're going to go full screen, and I will speed run through some market structure concepts. Many of you who follow me and already using my tools already know all this, but there's always a new influx of people checking out YouTube, YouTube thumbnails. So if you're new, welcome. My name is Nick, Key Poems. I'm in the trading community, and I trade market structure and build tools, sometimes statistical tools, sometimes market structure tools. And today I'm going to go through some basic market structure concepts, show you how they look in real price action, and then show you something I'm very proud of, which is the result of a lot of work. And we go through things together. Okay. Let me put myself in a corner, like this, and I have this. So what I want to do is slide this one and start to talk about a few concepts, and then we're going to look for these concepts in a real candlestick chart, in this case a 5-minute chart, and see if we can identify some of this. Okay, so let me hide this. I already showed this in some of my videos, but sometimes you can tell the price that the price of an asset is trending. Of course not that. Don't look. It was this one. Okay. So it's generally relatively simple if we zoom out the chart to see what's the main trending direction. Because if price tries to mix higher highs and higher lows, it's trending up. And it might come a time after a few of these swings with higher highs and higher lows that a certain low is breached and we have a lower low, right? Higher low, lower low. That is a market structure shift. Sometimes, it's a flip, and then price might come back up to retest and then continue to the downside. Just the basic market development that you see everywhere. Now, what I want to show you is a few concepts that you need to keep in mind if you plan on doing this sort of market structure analysis by yourself. Some concepts that we will stumble upon, and will give you x-rays into seeing exactly why we're turning here. And this swing is a valid swing, and so on and so forth. And there's a few things, so we're going to speed run. This. So the first thing is, what constitutes a valid swing? That's we should probably start from there, right? So, yeah, of course it doesn't want to draw stuff right away when I want it. So you have a candle, right? So I should have a candle something. So you have a candle. A speed run. I don't know how I'm going to speed run this. It's going to take forever. Sorry, I have a new keyboard, so I'm a little bit impaired. Send to the back. So we have a candle. Then I want to. Oh my God! I want to duplicate it. Okay. So you have a valid swing when a certain candle, black. So imagine the price has been going up, and then I consider a valid swing when the highest candle and it's better if it is closed above, but there's many conditions where you need to use your judgment, but there's rules. When a certain candle, the low of a certain candle, that's the important thing, when the low of a certain candle is closed below, and I consider this a valid swing. In ICT terms, it's just, 3 candle swings. It's a swing. In our case, we also want to make sure, for market structure, we consider a swing valid only if a bearish candle has closed below the low of the previous. It can be up close or down close, doesn't really matter. This is not a valid swing because the price has not closed below here. Okay, this is important. Sometimes you think there is a swing and there's no swing, and price can give you the impression that it's creating a lot of structure, but this is not real structure. And when price comes back down, it will actually ignore it. This is quite common, and it's also one of the traps that people run into. So the first thing is you need to understand what a real swing point or a real pullback is. You just look at if the candle that follows closed below the low of the previous one. That creates a valid one. Of course, if we're talking about the development of the market, what makes a valid price zone, box. I have something called box. You want this swing to happen above a valid high or above a confirmed zone. So confirmed zone is where a valid swing low, a valid pullback closes above a valid swing high, and then when you have a new swing high, a valid pullback, that validates this one and also starts the process. I call this a continuation high, and will become a real zone after something closes above it after creating a valid swing, and so on and so forth. Now, this is one of the elements. The other element that we track is what are the areas that are responsible for, like, let's say, the last up move before a downward break, or areas responsible for market structure shift or a flip in market direction. So often, shall I redraw this? Can you tell I'm very prepared doing this? So often you will have before, actually I was doing it like this. We're doing it live. Oh my God, that's terrible. Okay. So often there is a certain accumulation that happens before a major level is breached, right? So before a major level is breached, often there is, and now I completely messed up this drawing, and I've terrible, yo, oh my God, I'm gonna redo it. This video is gonna be a speed run of 7 hours. Wait, okay. Okay, I'll retry, redo it. Okay, so we have an uptrend. Then we have a major break of structure because a lower low, a lower high is violated, and we create a lower low. And then we come back to retest here, do a double top, and continue. Now, oftentimes, there is an upward move, an upswing, before this breakage. And this, so this is what we call, let's say, a bearish line, market structure shift, or a flip, or bearish flip, or however you want to call it. Many times we'll come back, and we'll come back to an area where there is the last up move before this breakage. We come back, retest it many times, twice, and then continue. Then price will continue to the downside. We call this supply and demand area responsible for breaking this level. So SNDR for shorts. This is another element of price action that you see everywhere. There's also other areas, important areas. So when a zone is created, So when this bearish zone is created, very critical and very sensitive. The last downswing or the last fractal or the last candle at the top is a very sensitive area where price will tend to give us strong reactions. So sometimes this will happen here. That's why breakout traders that are a little bit too overeager and enter here are often punished, because price comes back to reaccumulate orders, pair orders for the short, because people that want to take profit sometimes will take profit earlier, so your orders are paired earlier and there's not enough willingness of the market to continue and price comes down. All right, this is basic stuff. As I said, speedrunning. What are the other concepts I want to mention? Yes, I want to mention the sort of dealing range or dealing range concept, because then we're going to look at in price. So we'll bring it back here and show you something else. Okay. So there's another concept that it's actually not part of the general study of the market structure that I usually speak about, but it is incredibly powerful. And it's dealing ranges. So or let's say expansion legs, tracking the length of expansion legs. And how does it work? So in this case, price was trending upwards, right? And so we took both sides of the market, right? So we went up and then we went down. So we created a dealing range or a change in character of the market. So now I want to do something else. I want to draw a fib. Now, one thing that the market always does, it's not something I say, it's in the literature, it's something of some of the most basic and well-researched items on trading, and it's mean reversion. And so after an impulsive move, price tends to revert to the mean. And if you consider these new expansion legs, what's the mean? It's 50% of this range. So many times price, before continuing to the downside, will come back to the mean. So this is different than drawing the price zone, because of course the price zone contains, unfulfilled orders. Willing participants are waiting for a pullback into these zones to continue, yes. But there's also this concept of the dealing range, which the latest expansion legs, and not only the latest, but the major movements, major expansions, tend to be met with a retracement to their 50%. So this is something you can always draw in the latest expansion leg and go check how many times price will come back to just that 50%, sometimes sharply continue, sometimes looking for a point of interest before continuing. But this is something that happens a lot. I call this dealing range or expansion legs, and I track 50% of those legs. Okay, I think we've gone through a few of the concepts, probably confusing, but at least, we're talking about basics here. So we're not talking about advanced order flow stuff that sometimes we speak about, just basic stuff. I will stop here. And what I want to do is to go through a piece of chart, the 5-minute candles, highlight all the stuff that I see, and then show you a shortcut, how this could be done for you automatically, but don't have to. Actually, it's much better, let me say it immediately, it's much better if you train your eyes to see this structure by yourself without the help of any tool. But I'll give you a spoiler. There are tools in the market that will highlight everything for you. Okay. That was just a spoiler. Anyway, so let's try to look for these items I've been talking about and see if they make sense, right? So okay, we start from here. So I don't want to, because otherwise I cut myself, right? Okay. Let's see. The market seems for this so we're looking, we're checking, we're tracking. In market seems to be making higher highs and higher lows, right? So we're bullish for now, right? How can we tell? We can draw some lines, right? This seems a high. This is not closed above, so for now we ignore it. Now, if you want to test me on this and see if I'm drawing it correctly, that's actually pretty annoying. That I have to test myself without looking. See here, this actually touched it, right? Double check. Oh yeah, look. It didn't. Yeah, so it dragged it up because yeah, it's a long story how market structure works. Does it go to here? Yeah, and then we drag it. Yeah, okay, of course. So you can see we're making higher highs, higher lows every time we breach to the upside. Don't mind me. I'm flickering because you can use an aid for this. Yeah, so we're in a bullish stance. We're going up, and at one point the lower high is breached. I see one here. Is that correct? Yeah, look. Okay, this is the right one. Very shiny. Okay. Now, the first thing I wanted to show you is that what does qualify as a valid pullback? So, let's see here. See this candle. There's no bearish candle that closes below until we reach this point. So this becomes a valid pullback only at this candle, right? So we would not count this as a zone, right? So this area, do I still drawing? Yeah. So this one is not a zone in price because this candle is not being closed below. Let me zoom in more. And okay, so we track price higher, and then this candle is closed below. So then we can mark either this or this as the actual high of the valid swing. Okay, so this is what here is very easy, right? So we have a down close candle that's closed above. This validates this swing. Now let me do something different, right? So let's talk from don't show the zones. Don't show the protected lines. Don't show the continuation. Don't show nothing. Don't show SNDR. Don't show the dealing ranges. Yeah. So the first thing I did when I created my indicator, market structure indicator, was the zones will only make sense if we draw the. Do I have a way to make it bigger? Yeah. If we mark the correct swing points. And so the very first thing I coded, and by the way, it's available for free. It's called Valid Pullbacks now. And you see, this becomes a valid swing only after we close. Actually, maybe you need to draw it like this. Becomes a valid swing only after we close below here. And so on. So these swing points are the ones you need to use if you want to keep track of market structure. Only candles that have been closed over. Okay. So at one point, what other concept we mentioned, right? So we're on an uptrend. Once a certain level is breached, then the lowest point before the move becomes a protected level. I didn't speak about that. And then another concept that we mentioned about is the last down move before an upward break or the last up move before breaking to the downside, and we call that supply and demand areas responsible. Let's see what would happen if we would turn that on, the visual aid. Oh, wait, yeah. No, I wanted to... Oh, we're making it up as we go. Don't be harsh on me. Okay, see. So we closed above this level, right? So this now validates the zone. This becomes a protected level, which basically I've drawn myself, right? So because the indicator is not drawing it for us, but it can. So if you want to show the breakout structure or market structure lines, you will see that the indicator is tracking the same thing that we can do with our eyes. Now, because we broke above this level, even just by a little bit, we mark the last, well, there is some sensitivity to this. We mark the last down move before breaking up. Now, there's also this one, and it's correct, you can consider it. But SNDRs that are closer to 50% of this range, or even closer to the origin, are generally more reliable. And what you can see is that there was a reaction, right? Price came down and swept a double bottom, right? The usual thing that we mark with, we got a sweep, double bottom, and we try to continue. And I'm sorry, it didn't work out. You got a little bit of a move, but then it could not continue. So once we fail, what's the next target? First, this is going to be validated, and we came down. Where did we come down to? So earlier, there was this move in price, right? So we have a zone here. Box. And when we close above it, we never came back to 50% of it, right? We just made a first tap into the zone. So we tapped it once. Do I have a tap? Yeah, I do have a tap. I have a tap. And then, after all this excursion above, we came back down twice. Where are we? Well, it's sort of a nice downswing before the breakage, right? There is this fractal, but so we mark it as the SNDR, and the indicator will mark how many taps as it received, 1 or 2. And you see you have a major reaction here. And then you can also see that there's a fractal here exactly at the breakage. Once we close above it, and price goes. It does come down one extra time. Of course, price is messy. Then there is this SNDR, which is an interesting. So once we broke to this bearish market structure, then this was the last upswing before this breakage. So we mark it and see what price does. A sweep and a double top. And down we go. But it doesn't have the strength to continue. When a double top in a sensitive area fails and retraces, we have a saying in Discord I participate in, it says a double top failed, double top cooked. Means price will come back and liquidate it. And now at this point, after we breach above this level, it's pretty clear that market structure has turned bullish. So price comes back down, reaccumulates, and then runs. And then it accomplished taking up this high. And then we reverse very hard. All right. This is just to show you that the market structure can be read from higher time frame to lower time frames. It's all the same. These concepts apply universally to most assets, and you can learn to develop your eyes to see all this. Now, as I was telling you, there's also the famous dealing ranges, right? Which is once a certain expansion starts, price tends to return to the 50% of the entire expansion legs. I call these dealing ranges. So let's see. We remove. Let me remove some stuff, and we'll just try to see them. Just have an indicator draw it for us. So let's see. Can I? Let me just go back a little bit. So we know we are gonna get there here with this stat, right? We're gonna be ready to catch it. Let me hide it. Okay, so you've been tracking market structure. You realize we broke to the upside. Okay, and then we broke again. Okay, we're trending. So this is sort of a new expansion legs, and we're going up and up and up and up and up. And at one point, mean reversal will happen. So this is how we're tracking these expansion legs after basically after both sides have been taken. We can start tracking expansion legs or dealing ranges or latest range, however you want to call it. We can track and see how many times it comes back to 50%. And for a moment I looked, I thought that it was not recording. I was like, oh no. And price will come back to 50%. Now see, we came back to 50%. Now from the top to the bottom, there's another 50%. Now the thing is, we hit 50% of this dealing range. So now we can look for a reversal. Price will continue after tapping 50%. And now we know already what happened. So we came down, we did a tap into this zone. So we could expect an upward move. And we already know it because we saw it. Yeah, so you could go long here. Now the question is, which one are you going to take? Because also this dealing range has been mitigated 50%. So it comes back up, double top, fails. Yeah, you could take it down, sure. Depends on the horizon of your trades. Give me one pause, 1 second, pause. Yeah, the trade on, I'm sorry, I had to check the status. Yeah, I thought that I had taken 2 contracts off at the right time, and then one came back, break even. Well, okay, so this shows you the okay, yeah, there you go. So let me turn on the zones and the market structure. So now we start to add a little bit more context to things so that you can see things in perspective. Okay, so we broke to the upside. We're now bullish, can expect a retracement. And look, we're now tracking this expansion leg. 50% is around here. Are there any other structures like areas responsible for breaking things that we could expect a reaction from? Yeah, so here there's the last down move before breaking, and we have 50% of this new range that we have created. So it's an area that could become sensitive. Doesn't mean you're going to get the perfect trade. In this case, I don't think it's going to work. Let's see. So we came down to 50%. Maybe you think, hey, I wait for a double bottom and long, but the double bottom never happens. And you actually come here down. I think it even goes further. Yeah, so, okay. This is a moment where you have to make decisions. If you remember, the full pattern that I always talk about is the sweep double bottom. Okay, so this down leg, the 50% is here. Mean reversion, even if we are bearish and I'm going to break down and go down a lot, we might come back up. That's the 50% of this. There is this areas responsible that was in an unmitigated zone. If you remember, I had the 50% on. Let me show you the 50% of this zone. So, I want to show you something. Before this zone hasn't been mitigated 50% yet. So we consider that the job of this zone is not completed until it has been touched 50%. Okay. So what does price do? And now we hit 50%. Now we have a sweep and a very big double bottom. We mitigated 50% of this zone. We have a possible target for a retracement. What do you think is going to happen? I actually don't remember. All right, I don't remember. Let's see it. Let's see it. Yeah, it didn't hold price. What did you want from me? Ah, very funny, very funny. Sometimes SNDRs don't hold. No, it's gonna go over my drawing. Ah! This is the last up move before this breakage. Did you see what happened? I just want to show you. Did you see what happened? Yeah. How many points is this? Oh, it's only because 5 minutes. It's only 77 points. Okay, you can bet that at one point price will return to that 50%. So we're still tracking this leg, and it will come back. Maybe now, maybe later. But I want to do something else now with you, which is, did I turn on all the features? Show the value pullbacks, protected highs and lows. Enable double top. I didn't speak about that. Double tops and double bottoms. Okay. Yo, look, it gets so clean when you turn everything on. Let me make it less confusing. Let's talk about the double bottoms. Double top and double bottoms. Okay. This is something I still need to clean up. But so anytime that there's a market structure shift, my new indicator is going to start looking for double bottoms and double tops. And I wrote 4 algorithms to detect those. The one that you see here is the first one I coded. It's more traditional. It activates much later. So you can see this green line is where actually it activates. So it computes when it sees 2 swings. First swing, second swing, and then waits to return to the neck. Okay, so that's how it's coded for now. But this is just to show you that, will I ever be able to remove these drawings? Only time will tell. Yeah, so you need to be sensible with what you turn on and what you want to see, because there's a lot of information. But the important thing, so remove the dealing ranges. Remove the dealing ranges. Remove the 50%. Otherwise you get overwhelmed if you don't know, not familiar with. So we had a bearish market structure. bearish break. We know we had a tap into the previous area. Now we wait for a double bottom that gets activated here. So here you get your signal. The double bottom is drawn. You can enter. You can ride it. You know, in this case, it doesn't sweep, but it is still a lot of points. I forgot to mention, this is 5 minutes candle. So 5 minute structure is a lot of points, 50 points. It's a salary. Okay, so why did I show all this? Okay, here comes the pitch. You don't have to, you can close. So if you learned what you wanted to learn, just you can leave it. You can leave now. Show dealing ranges, enable dealing ranges. After a long time, so I have been working on a rewrite of this indicator, market structure indicator, for a very long time, and it's now ready. I didn't show the taps. Oh, there's so many things I didn't show. So after a long development, we're now ready, and we've been approved. I can announce that we've been approved by TradingView to make this available to everybody. And what you see here, you can have it. You can have it. The craziest thing ever. So there will be a link in the description. It's called Market Structure Pro. And it does mark automatically all the stuff that I paraded, and some that I forgot to parade, like the first taps into zones. See, first tap into zone that we spoke about. It's automatically marked for you. The double taps into areas responsible, the marking of the valid full pullbacks, tracking unmitigated expansion legs, and much more. Double top bottoms and double tops, that's not even here. So let's go. Oh, what am I doing? I wanted to slide and go back to where we started. I don't know why this circle is here. Okay. Thank you for following along this rambling and brief introduction to market structure and parading the new indicator that I'm releasing today. And let me know your comment. Let me know what you think of it. Link to checking this out is in the description. I paraded most of the features. There's of course a lot that you can tweak and tailor to your sensibility to the market. I am proud of this work because the precision of this, the market structure that it tracks is, in my opinion, very accurate. And I haven't seen tools this accurate. And I tried all of them. But this was a lot of work. So this I do have, and I will put it in the description. My hand is always hidden. I will put it in the description a link to a free market structure indicator that I give away for free, and it's very accurate. The one I paraded now has been rewritten from the ground up to be more performant, more precise, to resolve all the issues you can run into, details with the candles not closing, tracking higher and then coming back. There's a lot of things that market structure does that are complicated to track, and this new rewritten indicator tracks it very well. But you will tell me. Now, free one is available, but this one that contains work, like months and months, probably a year of work and knowledge and in developing all this, it's not free. So you don't have to get it. Actually, my suggestion, my recommendation is train your eyes. You don't need this. Many of my friends use a raw chart with just candles. That's the best way to go about it. But if you want training wheels where you start a help in seeing structure without much effort, you could get a lot of value out of this. So, hope you enjoyed this. This works as a brief introduction to market structure and my commercially available Market Structure Pro indicator. Let me know what you think of it. Link in the description. Look me up on X, I'm Key Poems, Key_Poems on X. Discord, Key Poems. TradingView, Key Poems. YouTube, Key Poems. And thank you for watching. Ciao a tutti. Alla prossima. Ciao.